Hello, Riddhi.
Hello everyone. So we'll start within a while. Our host for the day will join by 7:5. We are waiting for our fellow guest speakers. So we'll start in a while.
Good evening, everyone. Am I audible, Riddhi?
Yeah, Shravan, you're audible.
A hearty welcome, everyone. I'm P. Shravan Kumar, the founder and CEO of SK Associates and Group, an ex-analyst at Citigroup and JP Morgan, two leading New York Street Exchange investment banks, and an ex-associate solicitor at the Supreme Court of India and the Karnataka High Court. Today, we have gathered here for Conference 08 on emerging tax issues in incorporation of startups. SK Associates and Group is an internationally accredited ISO certified management consulting firm registered under MSMED Act 2006 with the Government of India. We provide management consulting services in the domains of compliance, operations, marketing, research and development, human capital, strategy, and operations to budding student entrepreneurs across the nation. SK Associates and Group was formed with a dream and a vision to provide consulting services to student entrepreneurs to help them in developing the economic growth and establish their dream firms across various industries like publication, operations, and many more. We work with startups and train potential student entrepreneurs who are aiming to bring a significant change, either in their business model, in the scale of operations, or both. To succeed in this endeavor, our clients need a specific type of consultant, someone who is a problem solver. Typically, such a person is entrepreneurial and passionate, thinks out of the box, and has an idea of where the problem lies, how to analyze it, and most importantly, what would serve as a perfect solution for it. They have worked on exciting projects, they have taken risks and have the scars to show for it. They have worked across continents and countries, and we call such people transformational consultants. We have worked for the past 3 years to build a network of such people, reaching out to them across universities, across industries, and across functional roles, where definitely they have come to us, they have approached that, and time and again, we have seen magic happen when we find the perfect solution for our clients. And this is what drives us when we find the perfect solutions for our clients and keeps us motivated each day to proceed further. We are passionate and excited about the impact such individuals can make in the corporate sector by building the next generation of iconic organizations. I would like to request all the attendees to switch on their webcams for a minute. Interns, researchers, everyone, please. Okay. We aim to mentor 3 lakh student entrepreneurs across India by 2026 by providing them with consulting services in the domains of strategy and operations, human capital, compliance, legal advisory, research and development, taxation, marketing and research, consumer behavior and consumer psychology, and help them in establishing their ventures by investing 20 crores US dollars in their startups over the next 5 years. We also aim to provide 50,000 employment opportunities to various lecturers across the nation by providing them with multiple volunteering chances. We strongly believe that strategic alliance and collaborations shall help us achieve our vision in working for the cause of global economic growth. Our executive management and operations team is always dedicated on working towards entrepreneurship development and community impact with a concentration on the point students are the upcoming future generations of our nations and need to be empowered for global economic growth. So the conference topic for today has been discussed as emerging tax issues in incorporation of startups. The story behind it is some days back, we met a founder who had come to one of our consultants for getting consulting services. I'm going to start my startup. So I want to know the tax processes for the same and the issues which emerge in a private limited company. What are the costs and processes? That was their question. And definitely every founder generally has this question while starting up. And post getting recognition of a startup, they need to apply for tax exemption under Section 81 AC of the Income Tax Act. Post getting clearance for tax exemption, the startup can avail tax holidays for 3 consecutive financial years out of its first 10 years since incorporation. Eligibility criteria for applying to income tax exemption is that the entity in concern should definitely be a recognized startup. Only private limited companies or LLPs are eligible for the same under Section 80 IAC. startup should have been incorporated after 1st April 2016. But definitely, this is a bit of technical knowledge which only chartered accountants, company secretaries, as well as tax attorneys have. So, in answer to such questions of budding students who wish to emerge as entrepreneurs, we have organized Conference 0.8 on emerging tax issues in incorporation of startups. Now, I would like to introduce all our honorable guests for today. Firstly, I would like to introduce Dr. Yasuyuki Kawabata, who is Professor of Tax Laws at Yokohama National University, Yokohama, Japan, since 1998. He has worked as an adjunct professor at Nagoya University of Commerce and Business, Nagoya, Japan, the University of Seoul, Korea, Utrecht University School of Law, Netherlands, and University of Wales, European Commission, Belgium, Kansai University, Suita, Japan, and Catholic University, Heaven, Belgium. Professor Kawabata has 28 years of expertise in teaching and researching on tax law and has been honored with a Bachelor's of Tax Laws, Master's of Tax Laws, Masters of Commerce, and a Doctorate of Tax Laws from Kansai University, Japan. Our next guest is C.S. Preeti Grover, a seasoned corporate sector professional, a practicing company secretary with 25 plus years of experience. She is a postgraduate in commerce from Delhi University and a law graduate from Delhi University as well. She serves on the board of a listed company as an independent director conducted by Indian Institute of Corporate Affairs, Government of India. She has successfully qualified the online proficiency exam for same. She presented a paper on Nifty 50 companies on gender diversity in board committees as part of the certificate course for women directors conducted by the Institute of Company Secretaries of India, ICSI. She has worked as a company secretary in Havells India Limited, a board secretariat of Oriental Bank of Commerce, OBC. Presently, she is practicing as a company secretary with specialization in company law consultancy, secretarial audit for public and government companies. Also, she is a certified CSR professional and she is committed towards the cause of women empowerment and education. We are also pleased to have Advocate Ashish Goyal, who is a lawyer practicing at the Supreme Court of India. Goyal graduated in law from the National Institute University of Judicial Sciences and holds the LLM from King's College London. He is a solicitor for a law firm in London and New Delhi, advising multinationals on their Indian inbound business. Mr. Goyal has also briefly worked in the law chambers of a former union law minister on matters before the Indian Supreme Court and the Delhi High Court. Last but not the least, we have C. Rishi Agarwal, who is a partner in MS Umesh Anita and Company Chartered Accountants from Agra, having his offices in Agra, Delhi, Lucknow, and Gwalior. He is a fellow member of ICAI and an insolvency professional with IBBI. Mr. Agarwal authored multiple textbooks for UG and PG courses at university levels and is a faculty at SBI Learning Center, Small Industries Training Center, and Agarwal Education Institute Private Limited, Agra. He holds a bachelor's and master's in commerce from Dr. B.R. Ambedkar University and an MBA from GG University, Bilaspur. Mr. Agarwal has qualified insolvency professional examination of IBBI, registered valuation examination of IBBI, and independent directorate examination of Institute of Corporate Affairs, Government of India. Now, I would like to invite Advocate Riddhi Bhanushali from the Mumbai High Court, my co-host for today, to take over. Thank you.
Greetings everyone. I am Advocate Riddhi Bhanushali, a practicing attorney at the Mumbai High Court and enrolled with the Bar Council for the state of Maharashtra and Goa. I am Shravan's co-host for the day and a Chief Strategic Alliance Advisor of SK Associates and Group. Even though throughout my career as a lawyer, my first question that I always ask this founder is how to apply for income tax exemption under Section 80 IAC of the Income Tax Act or Startup India. Tax exemption under Section 56 of the Income Tax Act, Angel Tax. Eligibility criteria for tax exemption under Section 56 of the Income Tax Act. The entity should be a DPIIT recognized startup. Aggregate amount of paid up share capital and share premium of the startup after the proposed issue of the share, if any, does not exceed 25 crore. Now, I would like to invite Dr. Yasuki Kawabata, a professor of tax laws from Yokohama National University, Japan, to commence his speech.
Thank you. Let me introduce myself. I'm Yasuyuki Kawabata from Japan now. Today, I would like to say thanks to all the participants, especially Mr. Sharaban Kumar. Thank you very much to invite me. So from now on, I would like to have a short presentation on Japanese scene of the starting up businesses. Could I share my slideshow now? Today's my theme is the academic viewpoint of the basic points and tax issues in business startups in Japan. My story is just limited to domestic discussion, not the international one. But I guess that the foreign capitals comes to Japan could enjoy about the same treatment with Japanese capital. So you can imagine that your investment in Japan would follow my explanation in general. Today I have just 15 minutes. I guess it's so short to explain in detail. So I would like to refer to basic points only. And the contents of my discussion is as follows. First is the legal forms of business startups in Japan. And next comes formation of businesses. And the third is fundraising method. And the fourth is in-kind capital contributions to business corporations. It would follow the tax-free transfer of assets from the shareholder to the company, especially between companies. The last one is the enhancement of business startups as the Japanese government's policy. And the first is the legal form of business startups in Japan. We had a free choice of business forms. Basically, our law, company law, as well as other laws relating to the business entities, have no restriction on the selection or choice of business forms when we start up the business. The first is, of course, individual entrepreneurships. It's quite an old form of business, but we have now somehow modernized form of business with several persons. The first might be partnerships. It allocates the business risks between participants or partners. So most of the countries, especially adopting the continental or the common law system in the world, would have about the same system of partnership. The first is general partnerships. All the members enjoy unlimited liabilities. Second is limited partnerships for investments, just limited to investments. That follows the control of Ministry of Economics, Technology and Industries, METI, located in Tokyo. The METI must recognize and allow to establish such a limited partnership for investments. Without such a permission, no one can establish such limited partnership. The third is a limited partnership for trade or business in general, and that also follows the control of METI. But the business activities of that entity is not limited to investments. That entity could do any kind of trade or business in Japan. The last one is a mutual fund for passive activities. That is a kind of securitization entity. So it's not normal for laymen to establish directly the mutual funds. but rather most of the mutual funds are established by business corporations or financial institutions. These are partnerships without legal personalities. So the partnership or the participants must accept the liability of the partnership itself. So the member or partner has big risks, business risks against the creditors. So the modern form of the business association should be company or corporations. We follow the German style of company system. So the first might be a limited company limited by shares. In Germany, Aktiengesellschaft. In US, they would be called as a business corporation under the state law. And the second is a limited liability company with relaxed regulations on the capital contribution or shareholders control, or even for the directors' authority to conduct business. Very relaxed one. It resembles to the US LLCs. Because of its legislative history of Japanese LLC, Japanese government looked to the historical development of the to check the box regulation under the US Internal Revenue Code. As you might know, most of the US partnerships sometimes select the entity taxation when they had suffered the losses, big losses, at the starting point of the business. But after that, the partnership could earn much money, and then they go to the entity taxation. And so Japanese government and the Federation of Economic Groups follow the US policies, and we established and introduced the limited liability company law when we had a Company Act regulation reforms around 20 years before. The third is a company with limited liability partners and unlimited liability partners. A mixture of limited partners and unlimited partners. It's like a limited partnership in US or UK. But the company has legal personalities as if they were a company limited by shares. And so the company itself has debt against the claimants. So most of the participants or the partners has just limited liability, as if they were shareholders of the business corporation. The fourth is a company with all unlimited liability. It's like a general partnerships, but the company has itself the legal personality. The last one is a cooperatives with legal personalities. Japanese cooperatives established under the Japanese several cooperative laws or acts has legal personality. It's quite different from US one. And say, for example, cooperatives for fishery or agriculture would control the fishery or agriculture industry. The last is non-profit organizations. I will skip that. And the next one, this topic is legal form business startups. Most of Japanese business has its legal form with company limited by shares. So the first point for business startup is capital contributions. Under the Japanese Company Act, we have various amounts of capital contributions depending on the legal form of the entity itself. Because of the relation with the capital market, some large companies have big capital contributions from the market. But other small or medium companies has just a small amount of capital contributions within the limited numbers of shareholders. And most of the funds they need would be raised through the bank loan or the borrowings from the shareholders itself. The next is the managers or directors. Entities with close relation with capital markets are required to set the board of directors independent from capital contributors. So the business operation and capital contributions are quite discreted, not to affect or influence to each other. But small entities distant from capital market could let capital contribution to be directors of that businesses. The last point is some industries are required to use specific type of legal form. For example, national banks. Under the national bank law, they must be established with a company limited by shares form and insurance company limited by shares, but some insurance company could be established in the form of mutual company with minor exceptions. Fundraising method for company limited by shares, most common is capital contribution by shareholders, but a large company, capital contribution through stock markets. That means they could earn capital with low capital cost. But as I told you, small, medium companies, the stock issued to closed group of members. That means they could only have a small amount of capital contributions or equities. Most of the funds are borrowed from bank loan or the borrowings from the shareholder itself. And then there is low equity effectiveness. Interference by banks to the business operation of such debtor company is a big problem about 30 years before, but now several corporations or a company limited by shares go to the capital market, and the relation with the banks are becomes less and less. And there is no general restriction on capital contribution from foreign investors, as like your countries, or loan by foreign banks. So some Japanese companies earn equities from foreign markets, foreign capital markets, or especially US or UK investors has a big investment in Japan as direct investment to Japanese companies. But nowadays, the most biggest investors to Japanese capital market is Chinese. For other form of business, equity funding is limited in amount, as a matter of fact. But the reason is mostly depend on the borrowing, bank borrowings from financial institutions, including insurance companies. Insurance companies is, as is the same case in anywhere in the world, big investment institutions. The good point for the investors to Japanese company is that there is in-kind capital contributions to business corporations. That is allowed to enjoy big tax benefit under the Corporation Income Tax Act. Corporation Tax Act allows corporate investors to contribute to other corporations with in-kind properties, equities, and non-cash contributions without no capital gain taxation of the contributors when they contributed some amount of capitals to the company. That means the book basis of such contributed asset in the hands of former owner shall be taken over to the accepting company. unrealized capital gain will be locked in the assets. Say it's like a non-recognition transaction under the section 351 of Internal Revenue Code in United States, but we do not use non-recognition of the calculation, but rather just the book basis will be taken over. Because of the continuity of the investment and continuity of the control justifies such a tax treatment. Enhancement of restructuring or reorganization of corporate groups or affiliates are big political issues around 2000. At that time, Japanese Ministry of Finance introduced the US type non-recognition, and now that scope of such a treatment is somehow made a wider one. And last discussion is the enhancement of business startups. Japanese government have several programs for investment enhancement, especially from foreign capitals. Tax concessions, and that means exemption, deduction, tax credit, and so on. Or sometimes enhanced depreciation would be allowed for some periods of business startup. Special depreciation might be sometimes allowed, or immediate expenses could be enjoyed. And the government subsidies for venture business startups are also exist, aiming for technology breakthrough, but in various industries, especially computer sciences, these treatments are limited. And Japanese government prepares business support other than tax matters. Say, for example, technology development assistance, management support, industry-wide support for small, medium enterprises. The conclusion, the Japanese positive acceptance of investment from foreign countries. I could observe such a conclusion. And governmental campaign investment in Japan program by METI has long histories. JETRO is a kind of affiliate of METI, has many offices in various countries as a window for investment to Japanese companies, and so on. Thank you very much for hearing me. Thank you very much. Thank you very much.
Okay, now I would like to thank Dr. Yasuki Kawabata and for the invite CS Preeti Grover, the former chairman of Noida chapter NIRC of ICSI, to commence her speech.
Thank you so much, Riddhi. Thank
You're
you
welcome, ma'am.
SK Associates founder and CEO Shravan Kumar, my co-panelists Yasuyuki Kawabata, Advocate Ashish Goyal, and CA Rishi Agrawal. I am first amazed at the energy of Yasuyuki Kawabata. It's almost 10:30 or 11 at night in Japan there. Yes, so and he's
Exactly.
so fresh. If I can just present my screen. I think it's visible.
Yeah, ma'am, it's visible.
Okay. So thank you for this opportunity. I think I'll start with that meme or joke that is often referred to. Many would have heard also maybe. So the tax holiday, which is being given to private limited companies and also LLPs, is an illusory tax holiday, which is often referred to as giving a holiday on February 30th. It's like equivalent to giving a holiday on February 30th, and on, in a leap year, the days February 29, 30, 31st, which actually do not exist. So that way, we are giving something, but we are not actually giving it. So there are some issues which are there. I think it's not moving to the second screen. Just a second. There is some issue. Is the screen moving? I'll just try and reshare it. Is it moving now? Is it okay, Riddhi, now?
It's
Okay. So startup as drivers for the Indian economy's growth, fuel innovation and value creation for all in general, thereby reducing wastages and increasing efficiencies by recognizing the gaps. India has emerged as the third largest startup ecosystem in the world, with over 61,000 recognized startups by the Department for Promotion of Industry and Internal Trade. Some of the points were also covered by Shravan when he was introducing the theme for the conference. I'll also try and briefly take up those.
Yeah, ma'am, it's okay.
Yes. So startup entity forms, could be private limited company, LLPs, and the definition of startup recognizes the three entity forms for startups for the purpose of benefits under Income Tax Act, as well as some other benefits. So it could be a private partnership firm registered under Section 59 of the Partnership Act, a limited liability partnership under the Limited Liability Partnership Act 2008, and a private limited company. So I'll skip this definition of a private limited company under the Companies Act. Section 80 IAC, which was covered by Shravan also. So it provides for a 100% tax holiday to an eligible startup for 3 consecutive years in respect of any profits and gains derived from eligible business. The tax holiday may, at the option of assessee, be claimed by him for any 3 consecutive assessment years out of 10 years, beginning from the year in which the eligibility startup is incorporated. Now, this can be chosen when a startup feels that this would be the peak time when they should avail of that tax holiday. If you feel that in the first 1 or 2 years, you are not yet achieved your potential, then you do not utilize that tax holiday in the beginning. So this can be chosen by the assessee how they want to do it, when they want to utilize this tax holiday. This is again, I think there's an issue when I make the screen like this. Just a second. The tax holiday, so it can be claimed for any 3 consecutive years out of the 10 years. So it can start from the 3rd year or 4th year or 5th year, but any time when it starts, it has to be for 3 consecutive years. Section 54 GB benefit of capital gains exemption is available to the promoters who sell their residential properties and invest in startups subject to some conditions. This is an important one, and it's slightly different for LLPs and private limited companies. So, first proviso to Section 68 requires a private limited company to explain source of funds raised from residents by way of share capital or share premium. And in this case, for private limited companies, there is no exemption from applicability of Section 68. Means they have to explain the source of who is investing and from where that person has got this the funds. The point which I started from in the beginning. So illusory tax holiday for private companies, startups, if MAT under Section 115 JB applies. There's no exemption from MAT for startup companies, as no amendment has been made to Section 115 JB exempting profits of a startup from MAT. So basically, you're giving one benefit, whereas you are imposing something else. So this has to be, when we discuss about the major issues, this is one issue which the government has to see, that how they can give this entire benefit and not give something and take away something on the other hand. Startup entity limited liability partnership, definition I'm not taking up, but it has to be registered as a startup and registered in India under the LLP Act 2008. LLPs incorporated abroad shall not be regarded as startups. Briefly, the tax consequences for a startup, which is a limited liability partnership. Again, the startup LLP can avail tax holiday for 3 consecutive financial years out of its first 10 years since incorporation. Tax relief shall be subject to some of the conditions, that LLP has to be incorporated between April 2016 and March 23. These are the same years which are applicable for a private limited company also. Earlier it was March 22, now extended by 1 year till March 23. So a private limited company or a LLP incorporated between April 2016 and March 23 gets this benefit. Turnover should not exceed 100 crores in the year in which tax exemption is claimed, and it must hold a certificate of eligible business from the Interministerial Board of Certification. In this also, again, that illusory tax holiday, declaring a holiday on February 30th, AMT totally alternate minimum tax negates the benefits for a startup LLP. In the 3 consecutive years that a startup LLP claims benefit under sections 80 IAC and or 80 JJAA, it ends up with a concessional tax rate of 21.54 approximately if ATI exceeds 1 crore, 24% if ATI is 1 crores or less. So I think this is the main points which the government have to consider when startups, the benefits are being considered. The main difference here in Section 68 is that there is an exemption for LLPs. So in the case of private limited companies, as I mentioned, the company has to mention the source of the source. In this case, there is no such onus on an LLP as regards capital contributions from partners credited in its books. It is sufficient if the firm explains source of the credit. So if the firm is explaining that Mr. So-and-so, who's a partner, has given this much, contributed this much as share capital, that is enough. Where that person has, what is the source of those funds is not compulsory to be declared. There's also Presumptive Tax Scheme under Section 44 AD is not available to LLPs. I will come briefly also to the registered partnership forms. A startup which is registered as a partnership cannot avail tax holiday under Section 80 ISC, nor can its partners avail capital gains tax exemption under Section 54 GB if they sell their residential properties and invest in a startup firm. So basically, private limited companies have certain benefits, and LLPs and registered partnership firms have the least benefits. I'll briefly end it with this point because I don't know how much time I have. Section partnerships firms can avail presumptive tax regime under Section 44 AD, where if turnover from business does not exceed 2 crores, firms can opt to be assessed on business income computed at the rate of 8% of turnover without maintaining books of account and without getting them audited under Section 44 AB. This facility is not available to LLPs and companies. I think I was having some issues technically, even though I had tried to check it earlier. But I hope, even without my video, it was here.
That's absolutely okay. We understand.
So I think these are the main points, Matt, and this has to be kind of considered by the government so that actual tax holiday is granted to the startups. I conclude my point here for the time being. I think it's also because I have two other fellow speakers. Yeah. So thank you. Back to Shravan.
Yeah. I would like to thank Ms. Priti Grover for her amazing and intellectual speech. Now I would like to request Advocate Riddhi Bhanushali to take it over. Yeah, Riddhi, am I audible?
Yes, you're audible, Shravan. 1 minute.
Okay. If you have any questions for our speakers, Riddhi. Yeah, Riddhi. Now I would like to invite Advocate
Further,
Ashish Goyal to comment his. Yeah, okay, Riddhi. That's fine.
Shravan, can I take over?
Yeah, definitely, Riddhi.
Yeah, sure. Further, I would like to invite Advocate Ashish Goyal for his informative and knowledgeable speech. Till then, if anyone has any questions, can ask Preeti ma'am as well as Yasuki sir. Yasauki sir.
Any questions, attendees? Arulji, Vibhuti Krishna, Viswajit Das, Arunji, Hitesh, Jyoti, Karina. Any questions about the speeches to our guests after here? Yeah, I guess Ms. Jyoti has a question.
No,
You
sir,
can
no,
just type
sir.
your question in the chat box. Is there any? Okay, fine. Sakshi, Mr. Rangnath Singh. Okay, I guess there are no questions. Ritik, would you like to address any of your questions to the guests?
Yeah, ma'am, I would like to know what is actually exactly MAT.
Sorry.
Ma'am, I would like to know in taxation what is MAT.
Minimum,
MAT.
minimum alternate tax, which certain
Okay,
amount has to be
and
paid. So you're giving the tax holiday, but some minimum alternate tax is charged. That is based on the turnover. That is applicable for LLPs also, and also for private limited companies. So basically, the tax exemption that the government is giving is not fully a tax holiday. So they're giving on one side, but the minimum alternate tax is available, is leviable.
okay, ma'am, thank you. So, ma'am, does the public limited companies have the option of minimum alternate tax?
So in this case, for startups, private limited companies have this option. So it's also it's a two-stage process. One, you register as a startup. The first process is registration as a startup. The next step is applying for exemption. So one entity could be registered as a startup, and they may not apply for tax exemption immediately when this register as a startup. Basically, when I said the tax exemption can be availed for 3 consecutive years at any time out of the 10 years. So that means you're just registered as a startup, you're working, but you feel you do not want to avail that tax holiday now. So they may continue to be registered as a startup, and they may at any stage later apply for tax exemption. So this is for private limited companies, LLPs, and partnership firms. Different provisions, which I kind of tried to explain in brief. I don't know. I thought we have two fellow speakers, Ashish and Rishi. So he's also a CA, so I kind of kept it brief.
Okay, thank you so much, ma'am.
I would like Ritik, Mr. Goel will be not be available immediately. He will be joining us in a bit of time. So if you can just invite our next speaker for the same.
Yeah, sure, I'll invite. So I would like to invite CA Rishi Agarwal to commence his speech.
Am I audible?
Yes, sir, you're audible.
Good evening, everybody.
Good evening, sir.
Actually, my co-speaker, Ms. Preeti Grubarji, host Sarun Kumarji, co-host Madam Priti Bhansali ji. Actually, startup का जो the concept of startup for the actually my voice is echoing.
No, it's absolutely okay.
Okay. एक्चुअली जो स्टार्टअप का जो कंसेप्ट है अपना to be eligible for a startup, there are certain requirements under the Income Tax Act. I think the ma'am has already discussed all these conditions, but for the sake of convenience, I just repeat. First of all, someone has asked to whether the public limited company is eligible or not. But for a startup, only private limited company or a LLP or a partnership firm, they are eligible for registration as a startup. And regarding turnover limit, in past 10 years, their turnover should not exceed 100 crores. Only then you are eligible to be registered as a startup. The concept of a startup is just envisaged to promote local for vocal concept of Modi government and to promote the startup culture. Actually, the angel tax, which was imposed by UPA government, has been removed by the Modi government in 2019. Angel tax means the tax imposed under Section 56. I think audience must be aware of this section. Under Section 56, there was a requirement that if a company issues shares at a security premium, then security premium shall be taxable in the hand of company if the issue price is more than fair value. And for this, on account of this principle, on account of this taxation principle, most of the startups have to bear the tax liability. Because under startup, basically initial funding was arranged from venture capitalist. And normally in those cases, they provide equity fund at initial stage, and when startup grows and achieve a constant level and steady level, thereafter they transfer the equity at a premium. The investors fund, they don't want to take simple rate of interest. That's why they charge hefty premium at the time of transfer of shares. And such premium amount become taxable under Section 56. That premium amount is exempt under Section 56 in the year 2019 budget. Moreover, startups can avail the benefit of Section 115 BEE. General tax liability on corporates is 30%. In some cases, it is 25%. But under LLP and partnership firm, the tax rate is normally 30%. But under startup category, you can avail even the concessional tax rate of 22% under Section 115 BEE. But there is a condition under that section that you will not avail additional depreciation under Section 32, as well as MAT. The provisions of MAT will not be applicable on you. Simultaneously, they denied the MAT credit if any earlier pending. Under income tax assessment, normally MAT credit under the earlier period you can avail. Moreover, unabsorbed depreciation loss can be carried forward. But if you opt for Section 115 BEE, then additional depreciation as well as loss, unabsorbed loss on account of additional depreciation and MAT credit will not be permitted to you. Now there is a tax planning in this case. If there is a pending tax credit in your case, then you can apply 115 BEE after the expiry of availment of MAT credit. It is not necessary that in the first initial year you will apply under Section 115 BEE. When your MAT credit period is over, then you can apply for 115BAA by filing form number IC. Similarly, if you have an absorbed depreciation loss on account of additional depreciation, it is not advisable to claim. It is not advisable to claim additional MAT credit. Sorry. It is not advisable to claim the benefit of section 115BAA immediately in the first year. You can avail that provision only after the expiry of and fully availment of unabsorbed additional debt loss. There are these two tax planning aspects under section 115BAA. And remaining provisions regarding taxation has already been discussed by my co-speaker earlier. If there is any query on this aspect, most welcome. Shravanji. Hello.
Yeah, sir.
Yeah, these two tax plannings I have to explain, and if there is any further query, it is most welcome.
Okay. If anyone has any query, may address it to Mr. Arwa on tax issues, anything. Throughout his speech. Shreya, Abu, Ambika, Ahmed, Anand, Ashwini. Nobody is on the screen. Okay. Riddhi, to like to get the previous doubts you were asking Ms. Preeti to Mr. Agarwal.
Thank you.
Sir, when it comes to section 80 IC or ICC, I guess it's 80. Yeah. So I wanted to know the complete section, like how it is helpful with the startup.
No, actually, there is a tax holiday period of 3 years out of 7 years, out of 10 years.
Okay.
Now it is up to you for which 3 years you have to avail the benefit.
Okay.
It is always advisable to avail the tax benefit it is always advisable to avail the tax benefit in later period, because in earlier period there may be loss, and there must be loss, because in case of startup there is a new idea which may be successful in the market or may not be successful in the market, or may be successful and may take some time to be successful in future. That's why if you avail the tax exemption in earlier period, then the tax savings, you may probably will not save any tax, because you may incur loss in the earlier period. Moreover, it may be possible your profitability may not be material, and that's why tax savings will not. Later period should be availed. Am I clear?
Yes, sir.
Yeah, Riddhi, do you have any questions for Mr. Kawabata? Yeah, am I audible, Riddhi?
Yeah, Shravan, you're audible.
Okay. Mr. Kawabata, am I audible?
Yeah.
Okay. So actually, I wanted to ask the similar way in which in India tax exemption is provided to startups. Is there any rule or law in Japan like similar to the same, which actually provides exemptions on tax issues for startups, particular startups?
I see. There is no exemption or special treatment for the companies or partnerships in the stage of startups, because most of the startup entities are, as a result of their performance, has suffered losses for several years. So there is no need to give tax exemption for such loss companies or loss partnerships. And as compared with profitable entities, it is inequitable or unequal to treat such a startup entity beneficiary under the tax law. Because of such an equality principle, Japanese government has no exemption or tax benefit, just only for startups entities. Is it okay, Kumar, Mr. Kumar?
Yeah.
Thank you.
Yes. Okay. So, like in general, have the rule of LLPs, private limited companies, proprietorships in India. Is it the same way in Japan too?
So around the same, about the same. Yes, exactly.
Okay. So, what is the most preferable mode for startup, like kind of entity that entrepreneurs select for startups in Japan?
I guess that if you had a corporate entity, the capital contribution from the from other companies are treated as non-recognition transactions, and the book value would be taken over to the new companies which accepted capital contributions. There is no capital gains taxation at the time of the capital contribution. So unrealized capital gain would be realized in the hand of accepting companies. So there should be certain types of shifting of income or shifting of capital gains. It's a kind of benefit. But we have no private partnership scheme. I guess that we should say all the Japanese partnerships are private one, because we have no capital market or open market for the interest of partnerships. So all the Japanese partnerships established under the Japanese law could be called as private partnerships. So there is no beneficial treatment.
Okay. Mr. Rishi Agarwal, actually, if any entity is a proprietorship, like let's imagine in a case scenario, an entrepreneur starts a startup as a proprietorship and further they convert it into a private limited company, would the exemption on taxes be still provided? Yeah, am I audible, Mr. Agarwal?
Yeah.
Okay. So in this case scenario, would the exemption on taxes be still provided?
No, actually, if the entity is the result of reconstruction or the split of any earlier undertaking, then the benefit of a startup will not be provided. The same exception is provided in the section itself. That's why if any proprietorship firm, if you reconstruct it into the partnership firm or into any other structure like LLP or private company, though under section 47, such a transfer may be tax-free under the capital gain regime, but for startup purpose, the benefit will not be available to you.
Okay, I get it. Preeti, if Miss Preeti is still there. Okay, I think she has left. Is Miss Preeti still there, Riddhi?
Yeah, Ms. Preeti is
Okay. I actually had a question, Preeti. How much would be the approximate time required for the conversion of a LLP into a private limited company?
I'm sorry, we were having some electricity issues in case the power goes off. So I'll just be in the dark for some time. So you asked what the conversion of LLP to private limited company?
Approximate time for that.
Approximate time, actually, I would say would depend on how MCA site is working. So maybe you heard that there have been issues. It has moved to, MCA has been moved to a new portal in March. But if everything is going fine, it's almost like the process of incorporation of a company. So if there's a conversion, you first apply for the name availability, even though the name might be the same, but it will be just LLP to private limited company to private limited at the end. So suppose ABC LLP to ABC private limited. So again, you apply for name availability for ABC private limited. So first step is the name availability, and then the next step is applying for incorporate. That's what I meant. The electricity is going off, so sorry. So there has to be an advertisement given in a form URC2, where you declare that it is under the process of conversion, and the same forms, SPICE forms, have to be filled in and applied for conversion. And it takes about, I think, if all is going well with the MCA side, I would say it will take approximately, it can be done within a week also. I'm sorry, all the issues are happening today only.
That's totally fine. And what if in the same case scenario, the entity, like they are actually trying to convert a proprietorship into a private limited company?
So, the time limit remains almost the same. What is happening is now, in the case of MCA not functioning properly, professionals are even saying that a simple incorporation process, as I said, which should not take more than 3-4 days to a week. At this stage, the professionals are saying it's taking anything from 30 to 40 days, which I would say is not the perfect scenario from the ease of business point of view, which the government is trying to convey, that they're taking steps for ease of doing business. But exactly when the issues are like this, so the data right now, if I can share that there's not a single LLP incorporated in March 22. And in March, generally it is that time of the year when new business ideas, so many things are happening. People want to do many things before the close of the financial year, and this is not the perfect scenario which has been in March 22. It depends on the issues. There have been too many, income tax side, when it came for the first time, the new portal, we know how it was. And sadly, it's the same issues which are happening at the MCA site also. So this is generally a process of not more than a week, which right now is taking any time between 1 month, more than a month also.
Okay, I see.
Anyways,
I'm sorry.
so like
I didn't know there's
since
some issue and power is going on again and again.
no issues. Mr. Agarwal, since you are a CA and Ms. Preeti is actually a CS, I would also like to ask another question here. How many audits would be required for a startup? Like approximately in a year?
No, for a startup, something additional special audit is not mandated. It is.
Am I audible?
Hello. For a startup, am I audible?
Yeah, you're audible.
For a startup, there is no specific
Yeah, perfect.
separate audit. The general audits as mandated under the income tax law, under the Company Act, under the LLP law, all these are applicable on startups also. In the normal scenario, you can say that generally 2 audits will be required. One under the Company Act or under the LLP Act, second under the Income Tax Act. And in the rare case, if in case of your bad luck, maybe GST audit may be conducted by the department. But generally, income tax audit is required, and under section 44AB or 44AD with 44AB, and second audit under the Company Act or under the LLP Act.
Okay, so no statutory or content audit is like compulsory in startups.
No, that is not mandated.
That's it. I would like to request the attendees to address any questions if you have. Mr. Abul Hassan, Mr. Aman Anand, Ambika Baduria, Amir, Anand.
Thank you, sir.
Yeah.
Thank you, sir. I am a fresher. I am very much happy to hear from you. It is very much honor to me to be united with you. I am learning something. I am a greenhorn, and I feel I will be in future to be enriched with these great luminaries to learn. I am from Bangladesh. I am very happy to join. Thank you, sir.
A pleasure, Mr. Hassan. Biswajit Das, Vibhuti Krishnan, no worries. Hitesh Jyotish Joshi, Karina, any queries? Yeah, fine. If you have any queries, you can address it in the chat.
Sir, additionally, how does often this conference occur or happen in a month or in bi-monthly? Would you kindly define?
Our conference series are hosted every month from 15 to 17. Every month.
Thank you very much, sir. I am not very much techno-savvy. That's why it's not possible on my part to continue and to join in time. But I have got the very signal, and then I got connected. So I am happy, though I am not in this tax matter related. I'm practicing here in Bangladesh Supreme Court and working as an Assistant Attorney General. But I feel it will give me an extra pleasure and extra advantage for me to learn and to face in the court. Thank you, sir.
Yeah. Mr. Kavavata, am I audible?
Yes.
Yeah. So as I asked, just asked Preeti and Rishi about how much time actually it would take us to like incorporate a company or convert it from an LLP to private limited in India. And the answer was approximately, Preeti. I just forgot it. You are on mute, Preeti.
Pardon?
Yeah. So for incorporation, usually everything can be done within a week. So I think we just wanting to check how much time does it take in Japan to incorporate a company?
Exactly.
In short, we can establish a company just one day with a specialist. But for the public company, it will take more than 1 week or 10 days to facilitate the founder of such a public company. And some company could have in-kind capital contribution made by the founders. And in the case of such an in-kind contributions, the courts, judicial court, will check the value of the property contributed to protect other founders. So at that, in the case of such an in-kind contribution, it takes more than 2 months or more. So it depends.
That way, India is okay. Although officially, we would also say maybe 2 days. But sometimes the site is having technical issues, so we generally take a safe time when we commit to the clients.
I see.
So I think we're doing fine by that standards.
So last question, Mr. Kawabata.
Yes.
Are there any different kind of taxes in Japan? Yeah, Jyoti too has the same question. How many indirect taxes are there in Japan?
We have direct tax, not only income, but also the inheritance tax or gift tax we have as a national tax. And in addition to such a national direct tax, we have local direct tax based on national tax basis. Say, for example, the city, in my city, Yokohama City, has a residence tax, but the tax basis of such a residence tax is a kind of income calculated according to the national calculation of income under the National Income Tax Act. So, how should I say? We have various direct tax on say, business. Is it okay? And also we have the consumption tax. It's a kind of indirect tax, like European VAT as national consumption tax. Okay.
So someone is also trying to ask, is there are different taxes at the center and the state level?
Oh, yeah. Yes.
Okay. So what exactly are the different taxes at the center and state level? If you could just elaborate in short.
Yep. Adam?
If you could just name, that is, give a brief description of the state taxes which are different at the central and state level in Japan.
Oh, sure. Say a prefecture one, a national and prefecture one. So local one.
Okay.
Thank you.
So yeah, Jyoti, any more questions you have?
No, sir. Got it.
Okay, Mr. Anand Rathod has a question. Government is promoting farmer-produced companies a lot these days, though expected to be run by farmers who are oblivious of company compliances. FPCs are subject to all compliances, including professional tax. Can FPCs qualify for startups? Even otherwise, are these exemptions FPCs could avail of? Preeti and yeah,
Rishi,
if you could help. Yeah.
Yeah, so I think there are conditions under ATI's AC. I don't think a farmer producer company would satisfy those conditions. This is my guess from the way the farmer producer companies are incorporated. They would not necessarily, because they would not necessarily qualify all those conditions as startup. So if they're not registered as startups, they'll not be eligible for these exemptions.
Okay. So, like, there are no such exemptions if they don't qualify for startup status.
Yes.
Actually, startup is recognized for some new idea.
Yes.
If FPC inculcates some new idea in either production or in marketing, only then they will be eligible for a startup. Simply just like under the designation of FPC, you are straightaway not eligible for startup category. Because FPC is not a new activity, or it's not a new idea. For a startup, you have to innovate something new. It may be in the field of farmer producing company, but there should be some innovative idea. Maybe
Exactly.
on distribution part, maybe on collection part.
This is something that I too agree on. Actually, startups are all based on that one idea which is able to scale the business and help them in earning profits at the end of the day. So I don't think that FPCs do come under actually that innovation segment of the startup industry. So is that all queries from the attendees or any other queries? Anyone? Yavamsi, Vikanshi, Sneha, Tushanta Adhikari, Bashri, Siddhi.
No, all good from my side.
Prajakta, any queries?
No, sir. No.
I think we've almost reached the end of the time.
Yeah. So Mr. Goyal, I think, was stuck in something and he could not come up. However, I would like to request the strategic analysis team to share his email ID in the conference groups so that if any of you has any query specific to law, you can address it to them on that. I would like to thank all the attendees as well as all the fellow speakers for making this conference a wonderful and amazing opportunity for everyone to learn. I would also like to thank you for bearing up with all our technical issues as well as being patient for the 1.5 hours of the conference. We will start tomorrow again at the very same time, 7 to 8:30 p.m. for the second session, where we would be entertaining around 6 CA and CS professionals from the domain of corporate law on the issue of tax issues in incorporation of startup. Until then, stay tuned and stay safe. Yeah.